Even the right wing and the Trumpers on the Federal Reserve believe that Donald Trump's economy has failed us. And in a stinging indictment of the Trump administration, they just voted, all 12 of them, to cut rates to try to salvage the wreckage of the Trump administration. In fact, the MAGA Trumper on there, the political hack Stephen Miran, whose day job is working in the White House, so he's completely not independent on the Federal Reserve, just got sworn in on Tuesday. He thinks things are so bad, he just voted to cut rates to over 1%. He wants to go to 1.25% between now and the end of the year. He wanted a 0.5 point interest rate cut. Right now, everybody else, all 11 other members of the Federal Reserve, including his fellow Republicans and fellow MAGA like Waller and Bowman, they were like, no, we're just going to do 0.25 point. But Miran, the guy who knows the economy for Donald Trump best and knows the policies best, because his day job is the chairman of the Council of Economic Advisors, he took one look at the Trump economy and hit the panic button and said, let's cut deeper and let's get it down to 3% interest rates before Christmas. That's a terrible thing, but it also shows that Donald Trump's continued assault on the Federal Reserve's independence has failed. Lisa Cook, the Federal Reserve governor, is embattled because they framed her. They have framed her with false mortgage fraud allegations. She voted, as did everybody else. Look, everybody can read the numbers. They're all economists. They all have a PhD of some sort. They see the failing job numbers, the failing manufacturing numbers, the failing consumer confidence numbers, the failing housing numbers. They can read, and they know, well, we don't want to raise interest. We don't want to lower interest rates because that'll lead to hyperinflation, but we might have to. Even the Wall Street Journal has come out against Donald Trump's economy, not once, but twice with its editorial board. Last week it said, you can't blame Joe Biden anymore. Sorry, it's now your economy. And now with the Federal Reserve cutting rates, here's what the Wall Street Journal in its editorial board, this is all controlled by Rupert Murdoch. This is what they said just yesterday. You got what you wanted, and it may the rate cut. It may be that everything works out fine. Inflation drifts downward after a brief price bump from tariffs. The economy booms despite tariffs and a looming labor shortage. The housing market enters a new golden age, and financial markets gallop happily off into the artificial intelligence sunset, said the board. You see where this magical thinking is going. But this is the ominous part. If Mr. Trump is wrong, voters will notice sustained inflation and the lack of gains in real wages. Having staked so much on his political assault on the Fed, Mr. Trump owns the outcome now, for good or for ill. I'm Michael Popok. You're here on the MeidasTouch Network on Legal AF. Let me put on my Wall Street hat. Let's talk about what we just observed with the Federal Open Markets Committee and their vote yesterday, and why Donald Trump's assault on the Federal Reserve, of course, failed, why Stephen Miran is not qualified to be on the Federal Reserve, let alone vote. But the fact that he pulled the ripcord, the emergency cord, and said, well, things are even worse than I think. We better be down to 3% interest rates at the bank-to-bank level by Christmas, or we're screwed. That's an indictment. Nobody should be celebrating in the White House. Hooray! Our failed economy needed deep interest rates cuts. You don't celebrate that. You should be ashamed. You should be ashamed to show your face. I'll tell you who wasn't ashamed to show their face. Federal Reserve Chairman Jay Powell, as always, cool, calm, collected, confident, takes to the podium and announces what they just did inside. But then I'll give you the nitty-gritty of the 12-1 vote and what it means for future rates. And then we'll wrap up about what's going on with Lisa Cook. Let's roll it now.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 0.25 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending.
Okay, that's the Federal Reserve Chairman Jay Powell. They also issued a press release, which I'll post on Legal AF Substack. I won't bore you with it. It basically says job market is weak, housing market is weak, inflation is much higher than they want it to go, and therefore we're going to use risk assessment and risk assessment policies to lower interest rates. That's a very nice and kind way of saying the economy's in the crapper and we're going to have to try to salvage it and rescue the Trump economy. That's what that means.
Hey everybody, Ben Meiselas here from the MeidasTouch Network. I wanted to let you know about my podcast partner, Michael Popok's new law firm. It's called the Popok Firm. Michael Popok's pursuing his dream of starting his own law firm, really based on the popular demand by all the Meidas Mighty and legal AFers who are approaching Michael Popok with their cases and saying, can you help us? And at that time, Popok was not able to. So he went out on his own. He started the Popok Firm, where he is now handling catastrophic injury cases like car accident cases, trucking cases, malpractice cases, big negligence cases, wrongful death cases. So if you or someone you know have a case like this, the consultation with Popok's firm is free. Give him a call. See if you have a case. It's thepopokfirm.com, thepopokfirm.com, or you can call 877-POPOK-AF, P-O-P-O-K-A-F. So 1-877-POPOK-AF. Give Michael Popok a call. And I'm really proud of you, Popok. Thanks for all the hard work you're putting in.
And that's why the Wall Street Journal is painting this picture of like, we might be in the Garden of Eden, in utopia. You might be, chasing after unicorns while somebody feeds you grapes. Or the reality of the economy may be setting in with hyperinflation and reduced gross domestic product. Even Jay Powell said in his report that the consensus of the 12 voters on the Federal Open Markets Committee is that GDP, gross domestic product, measuring the health of our economy, is going to be a very low increase of 1.6%. That's terrible. Should be in the 2 to 3 range, 4 if it's roaring, which of course it's not doing. The only thing that's roaring right now is people screaming out in pain and suffering because of the economy of Donald Trump. That's what's happening. Let's talk about Lisa Cook here for a minute. Lisa Cook, Federal Reserve Board of Governors, a little bit of an awkward moment. Stephen Miran, who is Donald Trump's, buddy, still having his day job on the Council of Economic Advisors at the same time he's voting on the Federal Reserve, wasn't prepped, got sworn in hours before the meeting. There's reams of data you have to review in order for you to vote. Even without the reams of data, just with what he had access to within the White House, he was like, we better go deeper, folks. In fact, when they put up a data plot of where the sentiment of the 12 voters are, everybody was like, we need 2 more cuts, probably to get us another 3/4 of a point. So down maybe 375 percentage points. He was like, no, we need 1.25 points. Like, I've seen what's going on at the White House. We need to go deeper. And that rate, that's the overnight bank rate. That's initially set by the Fed. And then all other rates are set off of that rate. Your mortgage, your personal loan, your credit card rate, your business loan could be, if you have amazing credit and collateral behind it, it could be 1 point above that, 2 points above it. If you're talking about a credit card, it could be 25 points above it. Student loans, 3 points above it. Mortgages, usually 2%, 2 basis points above that. That's how that works. And free and cheap money, it sounds great, but it just wallpapers over a major problem. That's why we don't want presidents to have their hands on monetary policy, because they'll just turn on the spigots and the fire hose of $1,000 bills, shoot it out, and then when they're gone, we're left with the wreckage of the inflation and hyperinflation. So Lisa Cook, Board of Governors, falsely accused of mortgage fraud, she gets to keep her job and gets to vote yesterday because 2-1, the District Court of Appeals in D.C., the Court of Appeals of D.C., said she gets to keep her job. She didn't get due process. She's voting. Now, they may be internally going, we accomplished what we wanted. She voted for the rate cut. Everybody voted for the rate cut. Even the 2 other Republican/Trumpers voted for the rate cut. Actually, all 12 voted for a rate cut. They just disagreed about how bad your economy is. Waller, who's trying out to be the Federal Reserve chairperson, he voted for the rate cut. He's a Trumper. And Bowman, who was put on by George W. Bush, he voted for it too. And Miran, who just got on yesterday or 2 days ago, he voted for deep cuts. So everybody believes your economy sucks. They're just having a policy debate about how bad it really is. Yeah, we got the rate cut because your economy is terrible. And as the Wall Street Journal said, in 2 back-to-back editorial board positions, you own this economy. You can't blame Joe Biden. You can't blame Obama. You can't blame Kamala Harris. This is your economy. And what you just did and had the Fed have to give you a life preserver of the interest rate cut may have a slim chance of succeeding, but a greater chance that it's going to lead to more hardship and sorrow and a crushing defeat for the American people. And they're going to keep an eye on it. So are we. I'm glad you're here. Take a minute, hit the free subscribe button on Legal AF, the Substack, where I post the Federal Reserve press release right here so you can read it for yourself. And also consider becoming a paid member and supporting us. Till my next report, I'm Michael Popok. Can't get your fill of Legal AF? Me neither. That's why we formed the Legal AF Substack. Every time we mention something in a hot take, whether it's a court filing or a oral argument, come over to the Substack. You'll find the court filing and the oral argument there, including a daily roundup that I do called, wait for it, Morning AF. What else? All the other contributors from Legal AF are there as well. We got some new reporting. We got interviews. We got ad-free versions of the podcast and hot takes. Where? Legal AF on Substack. Come over now to free subscribe.